Hello, hello, guys. How we doing tonight? This evening, I guess. A little earlier today. You guys know me, especially on Fridays. I like to do them a little earlier. Of course, I like to have my Friday nights a little more free, I guess. But also it's just close out the week, right? I prefer to have it right after market close. I feel like that's just better overall, to be honest. So you guys let me know what you think for sure. We had a hell of a run lower, right? What is it? We're down like 11%? 30, okay, no. Yeah. So we're down 13% in the last 3 days. Moments like these, right? I always talk about them. I always like to mention it. It's moments like these that you make money off of the markets going to shit and thousands of people losing money, losing their jobs. But you guys want to know the harsh truth about it? Who cares? And yes, it might seem like I'm forgetting the word for it, but like I have no compassion or no empathy. But the truth is, the money's in the markets work, they are worldwide. And yes, every time I make a single dollar, it's because someone's losing a dollar. And if you aren't okay with that and your morals are against that, then don't be a trader. All right. But that's how the world works, right? We're sharks. We're out here working against people trying to take our money. Every time you lose a dollar, it's going into someone's pocket. Market is one to one. Future is a little different. Sometimes we steal money from CME, but they close trading. So in cases like these, it's very hard, very harsh. Personally, today I wasn't really looking to trade. I took a short near the open. I'll showcase it to you guys. Got broken even after a little partial, and I just closed my charts. Because on days like these, it's not a question that I don't want to profit off of this move because I swung trade this move on my personal account. So I got a big piece of it. Not all of it. Definitely not. I really did not think we were going to see such a big Friday. But the truth is, in moments like these, I just prefer to stay out of the markets because it's so volatile, so aggressive, and usually tends to me making mistakes. Now, that's a personal, um, it's a personal rule, right? Once again, a psychology based rule. So that's up to you guys. But today we saw a huge run lower. We're gonna go to the higher time frame charts to find our clear objectives, just because it'd be so zoomed out on the daily. But we have very easy swing points, right, on this run lower. What did I say again? In our weekly outlook, we were looking at this SMT, right? I said that, well, we had SMT, yeah, here, from the fact that, yes, already previously took out this level, right? Or was it the previous level? I believe it was the previous level. Yes. So I wanted this SMT to hold, but if we traded lower than this, then for me it was done pretty much because ES was going to trade lower than this. I wanted to see the SMT hold, and this is all stuff we covered in the weekly outlook. And I said that if we do not, I'm going to be bearish for the foreseeable future. So being bearish, right, retrace to the premium of our range, our first premium in efficiency, which is this fair value gap. What did we do? Monday, Tuesday, Wednesday. We saw a Wednesday reversal here, which is pretty rare during NFP weeks. We usually tend to see more of a Thursday reversal, but I say this to you guys, in the last 2 to 3 months, it's been pretty much this, an early week reversal or a classic week, which means the same direction. But we had that swing form right at the correct area, which was also our new week opening gap, as you guys might remember from previous reviews. And then we just see lower, right? It's the weekly expansion. So my bias is lower, lower, lower. And I don't have a clear objective because I just anticipate that price will continue lower, except maybe Friday afternoon. But I'm never interested in trading Friday afternoon. Yes, sir, Perez. Rise model. But if we're seeing for the day specifically, it was a little bit of a weirder one for me in terms of structure, right? And that's why I'm mentioning that for me, it's just my bias that took over. And we'll also look at something key here, which is just we had SMT at this level. Let me mark it out. This is higher on ES. It's a little bit hard to spot now, this zoomed in. But if I just give you guys this, you can clearly see it's higher. And we have lower on NASDAQ. What does this tell me? high probability that this level is protected, I guess. I usually say high probability high of day, but we had Asia high in this case, which was the current high of day. So this makes me say that London framework will probably not be in effect today, especially it's a Friday NFP. I expect a trending day, right? Every Friday NFP, I expect a trending day. So I'm going to remove these sessions. These are the cases where I was talking about, I believe it was a Tuesday or Wednesday, where I use my discretion to understand when this framework has a lower probability of being met. But even then, you had a bunch of long opportunities, just did not reach that framework at all. I was personally looking to short, especially in that overnight movement. As you guys know, for me, overnight is from 5 a.m. to 9:30. We had a huge run lower, but then you returned to that first premium inefficiency. Now, this might look weird. Oh, actually, well, I thought it was in premium. Turns out it isn't. What if I go to the 5-minute chart? Yeah, okay. So in the 5-minute chart, we have our first premium inefficiency here. Did we even reach that level? Let's look at it. This is 18,274. And right here, we have 18,273. Did not even reach that level. You didn't plot in correctly. Oh, thank you. Thank you. Wow. So that makes life easier because I thought I made a mistake this morning because that was my first premium inefficiency and I framed my whole short idea around it. So I was a little bit panicking internally. All right. But it works. Thank you for making me spot that. Sometimes I go quick and I don't even verify it, right? I just drew it on the wrong point. But first expansion, even if we use the full high here, I believe we're still good, yes. But if we use high of day, then this is no longer in premium. So for me, it was really that high with SMT. But I like to always refer to the impulse price swing, right? We've talked about it quite a bit. I had such a blank there. I don't know what happened, but we talked about it quite a bit. It's the high that formed the move, right? I call that the impulse price swing. So that's where I'm interested to see the range. And see, in this case, you would have had the first premium inefficiency, and then we can look for continuation lower at our open. We had Powell speaking late AM, right? At like 11:30, I believe, and 11:25 or something. And truth is, I don't mind trading before, for example, before we had a Fed member speak, right? I really don't mind. So I trade before. I make sure that I'm either break even or fully out of my trade at this point in time. And then I'll look for other opportunities after. But as I said, for today, I was one and done. You guys will see this is our first premium inefficiency. I still have my drawings from this morning. This is your first discount inefficiency. As you can see, that was my partial. Right at the open here, 9:30, we have a Judah swing higher, right? Manipulation higher. That's your time-based manipulation at the open. And right away, we form a breaker block. Now, this was the breaker block that I personally used. Once again, focusing on the symmetry, right? Swing high to swing low. And here, we don't have a bullish candle within. It's like this bullish candle. So personally, I went down to the 30-second just to have a little bit more precise range. But you can always use the full range, as I told you guys. And see, in this case, you still don't have one. So actually going down to the 15-second, I guess that's what I went to this morning. I guess not. Okay, I just used the candle on the swing high. Probably on the 30 seconds, though. I didn't notice that, but that's part of the break of the range as well, right? It's that candle, part of the swing point. It's basically the start of the range. A little weird. Oh, no, because we're looking for a bearish breaker. See, I'm all over the place. I'm like, what time frame did I go to? But I'm looking for a bearish breaker. See, for us, don't listen to me today. I'm all over the place for some reason. But bearish breaker right here. Very, very straightforward stuff. I personally entered on the consequent encroachment. Right? I always tell you guys to include the volume imbalance. And truth is, does this offer me enough risk to reward to my partial? No. So what's my next level? Well, you can wait for it to offer 1.7, which in this case, you would look to enter here, and this candle did not offer it, but this next candle did. I just like to use more precise levels, so I use the consequent encroachment. Let's be pessimistic here and use the 1.7. So the first correct entry, I guess we can say. And as you can see, standard deviations aligning beautifully with your partial, which is your first 5-minute discount in efficiency in this case, was just a swing low here. And if we go back to the 1 minute, you guys will see we reach for that very quickly. But what's my rule? As soon as I partial, I go break even. And as you can see, not long after, I got stopped out break even. That was my trade for today. I was really one and done. I like to keep things simple. And now you might say, well, look at all this downwards movement that you missed out on, right? Which is almost, yeah, 800, 700 handles. But as I said, I don't care. I made my piece of the pie. And no matter what's going on, and this is where a lot of traders will disagree with me, where they'll say, when the market conditions are crazy, like that's where you have the biggest opportunities, right? Okay, so I'll swing trade it. Like I said, I personally took a swing trade on my live account that I've been holding. I closed it actually a little bit before then, which is actually bad. But why would I want to? This is my intraday trading. This is all about taking some base hits and growing an account. And no matter the market conditions, the worst market conditions, right? We saw this February. Right, let me go back to a daily chart. We saw this all during February and January, end of December even. These are the worst market conditions, right? This is a ranging markets. We still make money. Large expansion, the world's going to shit, we still make money. Large pump, we still make money. I don't need to make a lot of money. I just need for it to be consistent that I can make money in any sorts of conditions. That was the idea behind the Rise model. It was not to make the most amount. So yes, on moves like these, I kept my part and I stopped. And honestly, you could have just kept going. And you had a unicorn entry here. A little bit of a rough one to trade. Did you have an inversion fair value gap somewhere? Yes, you did. That would have been a stop loss, actually. Fair value gap would have given you a better entry, no? Well, that is the fair value gap. As I said, I always include the volume imbalance. I can't tell you guys that, hey, sometimes I'll include the volume imbalance, but now, hey, look, this is a bender entry this time, so now I don't enter. Now I don't use the volume imbalance. No, I'm consistent in what I do, what I say. So I personally looked at the volume imbalance because that's where I want to trade. And I wanted to enter here, but it just didn't offer me enough risk to reward, right? So I can't take a trade that is not worth the risk, right? Yeah, it's weird. You could get a huge pop at any time, plus AMP acting crazy with margins. Yes, exactly. It would. Okay, so I left AMP because of that. Honestly, they skyrocket the margins during moments like these and important news events, and I got wrecked one time, which really sucked. Other than that, do we have any follow-up opportunities? I mean, there's a potential long here that would have just break even best case scenario. Then here you have a breaker block for a potential short. We can consider this. I personally close my chart. I told you guys, in conditions like these, I'm not pushing my lock. I made money, get me out, right? You have an entry here, right? And this entry is, oh, that is a long. This is far too far from my breaker block for me to even consider this an entry, right? But then you have this inversion fair value gap. And truth is, honestly, 4 times out of 5, you're going to miss this trade because it's just going to run without you. But in this case, it actually came back. And if we look at the 3 PDRA stop loss, you have inversion, and fair value gap, which means your stop would be all the way up here, actually. But you have the order block here. You have like 5 PDRAs in this. I would honestly place my stop a little bit tighter, probably at this high, because it also allows for price at the high of the inversion, sorry. So not the high of the candle, but the high of the inversion, because it still allows for price to go there. But once again, let's not pick and choose. And even though you might have a, 100 handle stop here, I was talking about this with one of my friends who is also a trader now, Flacco. You might have seen him in the Discord. We were talking about it, and he was like, I just got my biggest trade, 400 handles. And it's like a year and a half ago, my biggest trade was 130 handles. And that was fucking huge, right? I was so proud when I got that trade. Now my biggest trade is 900 handles. And I'm like, what the fuck? Right? Market volatility really messes with my mind. Clear objective here. external liquidity, current low of day. Nothing more to add there. Would have offered plenty of risk to reward. Would I have looked to partial here? Probably. Honestly, I mean, I can lie all I want, but I would have probably taken a large partial here. Why? Because I don't have a clear area to take a partial in this range. And once we break this range, we have very high chance of retracement. So instead of taking a 50% partial, these are cases where I would take all of my position but one or two contracts. So pretty much we're looking at 75 to 80% take profit. And then, of course, being break even. So would have been another break even there. Could you use the same breaker as your entry since it has not been invalidated yet and enter off the IFVG? This is what you sent me this morning, I believe. So reuse this breaker block. Okay, well, let's say we reuse this breaker block. Okay, so why aren't you entering here? Is this not in close relation to the breaker block, this entry right here, off this bearish fair value gap? Yeah. So basically, here you're telling me that you want to pick and choose this entry just because it happened there and you had a good entry. I don't do that. I think that's a good way to tell yourself that you are trading, but you're actually gambling because you don't have a system. Unless you do this every single time it happens, then you don't have a system. So we can argue about is it a good thing or a bad thing, but the truth is, I just follow a system because that's what makes my life easy. I come in, I trade for an hour and a half. You know, you were saying that this morning. You know, you come in, I come for an hour, I do my thing, make money or don't, I don't care, and then you're done. And it makes life so easy. And you can make tens of thousands of dollars every single month, and even hundreds of thousands of dollars every single month just by doing that. So why the fuck are you looking for this trade? Stop being greedy. That's my thought process. And this is a little pushing it in my book. Let's say I was happy. I took a tiny little partial, got broken even, and I was like, you know what? I'm one and done. Market conditions are shit. We've already expanded, like, what was it? 500 handles? We've already expanded 900 handles since the daily open. And you're still looking for fucking trades? That's pushing it in my book. And I mean, if you guys were bullish, there was a long slash break even opportunity here, and then we can look further. See here, you don't have an entry. I believe I saw someone take a trade somewhere around here. Yeah, exactly. You have a beautiful breaker here. Right? As soon as you form that breaker, what is the first thing you do? You retrace down into a unicorn right here, overlapping fair value gap. Then you have inversion fair value gap, and order block. Another inversion here, actually. So your stop would be tighter. Oh, that would have scared the shit out of me. But successful, did not reach it. And I mean, this is probably the best trade of the day, offering a lot of return on this trade. Let's find our objectives here, see if it would have worked out great. So 5-minute chart, as always, going to use the most recent range, which in this case, I mean, you could use the small range. Yeah, in this case, I always see this because once again, this swing point is just part of this move in my book. So I would have used this range, but if you use the most recent 5-minute range, it is that range. But I mean, your entry's right there, so you have to use the bigger range in this case. Anyways, first premium in efficiency, we have this order block right here. Let's go look at how much return, how much RR that would have offered. It looks like plenty. So it's this open right here. Is it the open of the bearish candle? It is. Let's mark it out. 2.45 R. So yeah, it turns out that on a day where we shorted so crazy, the best rise model was the long for the best return, right? Partial right here, then you go break even. But trust me, 4 standard deviations here is a great opportunity to take profit. This liquidity in premium of our range, great opportunity. This is the kind of setup where you take up your big partial and then, oh, one off here. One off here. If we go up there, I'm going to add another one off here because you're up so much risk to reward. So it's worthwhile between here and here where all of a sudden you're up almost double, well, 1.5. It's worthwhile to take profit. And then here you're up 5R almost. It is worthwhile to take profit. So a very great setup. Oh, that was on the wrong level once again. which you did reach here barely. I don't know if a limit order would have gotten filled here, but you went right after. And with your stop break even, you would have only gotten stopped out on a potentially a final runner here. I would have definitely trailed to here. You guys know my rules. We close above this range, then my stop is going to be at the low of that range. That's how I trail. It's always been easy for me. It's a very simple rule, and it's always made sense in my mind. So, I mean, if you were in that short, you could not have taken that long. But if your bias was bullish, you would have had a very nice long opportunity. Who was it? And are you guys in here? Someone traded that this morning. I remember seeing a picture set. Oh, that's you, Nico. Nice. Paper trade, but still, right? You got to practice. Paper trade is practice. And other than that, I mean, we can consider taking a long after lunch, right? Because there's a lunch framework. And I mean, I was talking about Flacco here. His real name's Jordan. A second ago, he loves his lunch trade PM on Friday. I personally don't, because why the hell would I be trading Friday afternoon? But I mean, there was an opportunity. Unsuccessful lunch trade here, but it would have worked out. Very nice, Jay. Very, very nice. He is still learning. Great job. Yes, sir. Indeed. Getting some practice with paper trades as you should. As you should. Honestly. Until you can prove you're profitable paper, why the fuck would you be live trading? And yes, there's a difference when you put real money to it, especially when you're risking $500 or $1,000 of your own dollars, right? Not a prop firm, your own dollars. There's a difference. But when you're trading a systematic approach, it's a lot different. Because your mistakes aren't like, oh, well, I should have seen that, but I missed it. No, your mistakes are going to be, I didn't follow my rules. I didn't follow my rules. I still didn't follow my rules. That's always going to be the same mistake. If I followed my rules, I would have made money. That's it. Or I would have lost money. You know, we don't always have 100% winning days. But it's been a great week, right? One loss for me, and I mean, I can show it to you guys. I shorted this, but I kind of shorted up here and closed my trade. So it wasn't a good loss. It was, I made a mistake because I was greedy. I FOMO'd in up there, and then I trailed my stop super tight, and then I just decided to close my trade. I was like, what the fuck am I doing? So I closed it at a small loss, then got this small win. Was I think I was up $500 for the day or something. Definitely under $1,000. And, you know, I just called it there, made a mistake, and got a base hit. Let's just close it, right? Imagine going to Best Buy, buying a new MacBook Pro, and throwing into a river before you get home. That's how live trading starts when you lose. Okay, dude. I love the guys who stick it and learn and don't brag like most new ICT traders. Well, you know, it's just ICT, when you watch his videos and his rants and everything, it puts you in a state of mind where you believe he knows what he's talking about. And for certain things, he's respitting what he studied on for years, right? Learning from other people or stuff that he figured out himself, which there probably is some. But he's not a trading mentor. He's a marketer. That's the truth. And I'm never gonna lie that his stuff made me profitable, right? And I owe him respect for that and recognition. But the truth is, being a marketer in this space, you're not helping anyone, right? And even if you're not selling shit and you're being a marketer and making fees off of affiliate referrals or just even YouTube AdSense, you're not helping anyone. How the fuck is that helping people? So I do the boring stuff that doesn't get a lot of views, doesn't get a lot of followers, but I kind of like doing it. And I like seeing the impact I have on people. I don't know. Makes me happy. But let's talk about this lunch rate, right? Right after 2:30. This is a little late for me, especially on a Friday. But I mean, there's a setup, so maybe some of you took it, right? I mean, it's very, very straightforward. Unless we closed above here. Oh, yes, we did. This is a little far, but let's be pessimistic and let's, oh, whoa, what did I do? Let's be pessimistic and imagine this was your entry off of the inversion fair value gap instead. And then you would have had fair value gap, you would have gotten stopped out here. So quite a bit far from it, but I mean, sometimes, as I tell you guys, sometimes I feel like it's close, sometimes I feel like it's far. So definitely if you were down here and had to stop here, that would have been a successful long opportunity. Definitely at least a partial followed by break even. But if you took that entry right here, as I said, I always like to be pessimistic. That would have been a loss here because your stop would have been tighter at this level for the inversion, fair value gap, and fair value gap. Your rise model has helped more than anything I learned from him. Well, fair enough. Thank you. But I mean, it came from him. At least from where I learned it, it was from him. So I don't mind if the IFVG is created before or after the breaker. It has no impact on it. I had my best week. Every week gets better. I'm 3 months in on Rise. You know, that's what happened for me for a while now. When I started slow. Like for example, my first payout was 957 bucks, 13 cents. No, 53 cents. It's been a while, but I still remember it. Still have the screenshot. Uh, it was a very good feeling. But then every month, it's like next month it was like 2.3K. Next payout, I mean, then 4K, then 10K, then 40 grand. It is very proportional. It goes up exponentially. All right. Do you only trade the Rise model? Yes, sir. You would have asked me that question like 7, 8 months ago. I would have said, yeah, I trade the Rise model, and sometimes, I just use my experience. I see some trades. Now I really only trade that because it's so much simpler on my brain. I know what I'm looking for, especially. I don't even have to think. Like you guys can look on YouTube. There's a playlist on our channel, on my channel, where you can see my live trading videos, and you'll see me predict price for 2 hours and a half nonstop with extreme accuracy. That is still something I can do, but it is not something I'm looking to do because that is complicated. That takes a lot of brain power, a lot of energy, and I'm trying to be here to save time, to buy back my time. When you have a chance, I was talking to you on Twitter about Romeo's tree bar reversal pattern CRT, and you said you had the data, so I was curious to see. Sure, you know what? Why not? Let's do this. But do we have any questions about the day before we dive into what Jay was talking about? And I mean, you probably have a short opportunity, but you guys know me. Even this trade is too late for me. I never look past 2:30 in the afternoon. 900 Canadian, 20 bucks USA. No, it was US dollars. When I talk about money, I always speak US dollars. I'm so used to it. Romeo is the CRT guy, the fake doctor. How do you manage your R's on the go since the risk points are always different for each trade? Just draw the box, bro. Before the breaker is even formed, I always anticipate. So I'm like, okay, well, if we trade above here, this will become a breaker. And now maybe this will give me an entry, then my stop's going to be there. So I just draw my box in advance. That's what I do. And I mean, I've been live trading for a while now, and I can just see it instantly pretty much. I see my stop and I use the measuring tool, and I'm like, okay, well, that's my stop, 54. And then I'm like, okay, well, my take profit has to be at least that. And you can either use the box or you can just do, okay, well, it has to be here. A lot of people that I've seen actually really love this stuff is, for example, you can just set a fib. So you'll set a fib from your entry to your stop loss, for example, and you can have, for example, a preset fib. I really see I have one for RR here, and I always draw it. I usually draw it from my entry, then I place my stop loss, and then you have your R. I haven't used that in so long, but you could have a level here where you're like, okay, well, this is minus 1.7. And you put that guy red so that you know. So now you know that this is your minimum. So if your take profit is below there, then you have to wait for a better entry. And then you can be like, okay, well, what if I enter? Oh, there we go. Now it aligns with my take profit, for example. I really do recommend this. So just having a straight up fib for your RR, that's probably the easiest. I like to see my trade box, personally. Does that make sense? Hopefully that helps you a little, Magic. I'm not seeing any other questions on price that happen. So mindset of the model is take every setups, but expect continuation when in line with bias vs retracements. Pretty much is if I'm bullish, for example, here, I'll give you an example. Here today I was bearish. Does that mean I cannot take longs? No. But it means that I understand that longs will be retracement. What does that mean? Well, you know how we figure out our partial? Like, for example, let's look at the morning trade, right? This is my partial to go short. But if my bias was bullish today, this would have been a full take profit. Why? Because I expect that after we reach this first discount in efficiency, we're going to reverse and continue higher. I'm bullish. So every move higher is going to be expansion. That's going to break ranges. And every move lower are going to be retracements that go to the first discount / premium in efficiency, right? So that's how I interact with bias. For example, today I was bearish. So my faith, my understanding is that once we trade to that first premium in efficiency, then we're going to keep going lower. So I can still long that move all the way here. But then I have to go short. This is not a partial. But if I was bullish, then I'd say, oh, this is just my safe partial in case I'm wrong. But then I'm going to expect it to go break that range because bullish, looking for expansions. Been using one of my funded accounts with the Rise model and close to a payout. Let's go. Love to see it. Definitely tell us about it once you get there. Keep going, right? Consistency, everything. But you guys know, this week, honestly, this was the hardest day this week. I feel like all 3 other days you had perfect setups right away. And as I like to do, I was one and done. Today was a little different, but I took the first setup that presented itself to me. Took a partial, got done after I made a mistake personally. I don't like mentioning it. It doesn't feel good, but I mean, it's important to remain transparent with you guys. So my P&L today was smaller than pretty much the 1.5 R I should have made on this, because this is the type of day where it's full take profit except one contract. But sadly, I took a loss before, so made like 0.2 R on the day. 0.4 technically. Let me open my statistics so I can go on and show Jay what I was talking about. Because, you know, Jay, I don't like to advertise under other people's posts and say like, oh, look, I have the data here and whatever. I'm not there yet, to be fair. At some point, I'll pay someone to do exactly that for me, but you'll never see me doing it. Is that CRT thing? Yes, it is. Let me bring it in. You guys should now be able to see it. Give me a quick confirmation if you see right statistics right now. All right, awesome. So we can go on all of these time frames. I'm not going to cover all of them with you, but I believe that Romeo talks a lot about the 1 hour chart. It's my pleasure, Jay. I love doing this. Love sharing data. Choose a time frame. You guys choose a time frame. Where do you think CRT is, especially the 3-bar reversal pattern, pretty much? So calling, for those of you that don't understand what's going on, it's AMD, but with time frames. So pretty much one candle is the accumulation, one candle manipulation, one candle distribution. Sorry, my mouse just ran out of battery, so I'm going to have to plug it real quick. I have to plug it like once a month, but 4 hour? All right, let's go look at the 4 hour then. So what are these candle profiles that I'm seeing here, right? For those of you that have never seen Rice statistics, let's go in the help section, and you'll see it's defining every single candle using 4 different profiles, all right? So we have a true breakout where we close through one level. So whether it's a bearish true breakout or bullish through breakout, doesn't matter. False breakout, we take out the level but don't close through it. Same thing. Reversal, take out both levels. And inside bar, where we don't take out any level, right? This is not a question of bias, very similar to our bias logic showcased in the bias analysis, but here we're defining candles. And what we can do is look at the probabilities of each profile being the candle. So for example, I know that the 10 a.m. candle has a much higher probability of being a true breakout and a false breakout than the first 4 hour candle of the day, which is most often an inside bar. Right? You have all of these. So these are very interesting, right? You can go very in depth, but what we can do is filter using previous profiles. So for example, right, what Romeo is saying is first candle, so this is the furthest candle back, so n-3. It doesn't matter what it is, right? What matters is that the next candle is going to be a false breakout, And just to go back to the help section here and tell you guys, right? I should remove the quality of these pictures a little bit. They take a while to load. But what he's saying is this first candle, we don't care about the previous, right? So we don't have to set a profile for this one. But then you have a false breakout. And what we want to look for is the next candle be a true breakout of that candle. Isn't just renaming someone else's shit? Yes. Renaming someone else's shit? Yes. So you want to know how often, if 2 candles ago was a false breakout, no, if actually, because we don't care what the third candle is, so it would be here, which is a false breakout, and we want to know how many times the current candle is going to be a reversal, or true breakout, sorry, or a false breakout, which could also reach it, but false breakout would be different. So for example, if I have CRT and I'm looking at those levels, 45%, 34%, 42%, 44%, and that's just of reaching the level. This doesn't take into consideration one big thing, but even those are the stats I was talking about, Jay. All right, and then it's just me doing some rambling, right? So if we go back to our chart, it doesn't take into consideration that maybe after your 4-hour candle. So let's just imagine this is the high of your 4-hour candle, and then we sweep it. This is the pattern he's referring to, and then on the next candle we're gonna have that expansion lower. But it doesn't take into account that maybe we did this before, and maybe we did a whole bunch of bullshit in between that would have stopped you out 20 times. So basically trading without stop loss and advertising it, which I really hate. But yes, Faraz, it's been outlined multiple different times. And I mean, you want to see the consistency? Just open a chart. Open a chart and you're like, oh, look right here. Candle ranges, right? Sure. We formed a higher time frame swings. Yes. Is it going to work sometimes? Yes. Here, look. Oh, this is candle ranges. Of course, this is candle range theory. Sure. Okay. Well, you would have had to look at 186 handles of drawdown for 108 handles of profit. But then if you swing trade it, you might tell me, well, look, okay, now this is like a 4-hour trade. Yeah, in a few days. And you would have had to had your stop be like 1%. So, I mean, of course, there's a bunch of ways you can trade this profitably. I just don't like the way it's advertised because this is really bad. And you know me, guys. I never say shit about other people's models. All right? I only talk about my own model, right? The RES model. But please don't trade this. Trade anything else. Go trade breakouts. Breakouts are higher probability than this. And at some point, I might really go in depth and like make a bot that trades based on what all the bullshit people say. But yeah. I was wanting to know about expansion. Do you know what days we have the most expansion and vice versa? Yeah. You would have just looked at the biggest distribution days. So what days of the week have the biggest distribution? And now, I mean, I like you guys a lot, but I've already showcased one thing from Rice Statistics today. So we're going to leave it at that. Yeah, exactly what Faraz says. Some people need Rice Statistics subscriptions here. I have a big thing coming, and I'm going to run a discount for it. We're looking at, like, in 2 weeks, probably. I want to try and make it 2 weeks, might be 3. But it's a big update coming to Rice Statistics. I've been talking about it for a while now, but I'm going to run a big discount. So if you guys were questioning if you wanted to use it or not and test it, wait 2 weeks. You'll survive. And then you have a very cool thing there. You're getting personalized help for free. What a big deal to sign up and get an edge. True. Very, very true for us. Well, I mean, you know. Excited about the update? It is coming, brother. It is coming. I'm excited as well. Do you guys have any final questions before we close this off? It was a great review for Friday. I mean, we've been here for 40 minutes. Usually they're a little bit quicker, but usually the days aren't this fucked, to be fair. Awesome. All right. Well, I wish you guys a great weekend. As I always remind you, take it easy. Take some time off. Recharge. Enjoy your time. There's no reason we're trading this much and grinding this hard to not enjoy our time off. All right, guys? So you guys have the best of times, and we'll see each other on Sunday for another weekly outlook. Bye, guys. Have a good one.